Welcome back to the channel. Today we're analyzing the latest financial performance and future market trajectory for Johnson & Johnson, a cornerstone of the global healthcare and pharmaceutical sectors. With the stock navigating key technical levels and analysts providing fresh multi-year forecasts, there is much for J&J investors to understand. Before we break down these critical financial tables and charts, please like this video and subscribe to the channel for more institutional-grade market analysis. Let's get into the J&J report. We begin with Johnson & Johnson's current market standing on the Nasdaq. As of the latest reporting, J&J is trading at $242.59, showing a solid intraday gain of 0.91%. This positive move reflects a steady confidence in this healthcare giant. Looking at the 52-week range, the stock has moved from a low of $141.50 to a high of $251.71. With the current price sitting near the upper end of that yearly range, J&J is clearly demonstrating strong relative strength. The trading volume of over 7.8 million shares underscores the deep liquidity and continuous institutional interest in this blue chip leader. This market snapshot provides the necessary context as we transition from price action into the fundamental earnings and forecast data that will likely determine if J&J can push toward new all-time highs. Turning to the earnings per share chart, we see a company that has maintained an impressive streak of consistent performance. The dark blue bars represent estimated EPS, while the light blue bars show actual reported figures. For every single quarter in 2025, from Q1 through Q4, Johnson & Johnson has delivered a definitive beat over analyst expectations. This level of execution is a hallmark of the company's operational efficiency and diversified revenue streams across its pharmaceutical and medtech segments. In the fourth quarter of 2025, the reported EPS came in at $2.46 against an estimate of $2.43. Looking ahead into 2026, analyst estimates point to a continued growth trajectory, with quarterly projections climbing toward the $3 mark per share by year end. The visual consistency of these 2025 beats and the rising future estimates provides a robust fundamental foundation for the company's long-term growth narrative and builds significant investor confidence. The quarterly earnings surprise table quantifies the magnitude of this recent outperformance. For the most recent quarter ending December 2025, J&J reported an EPS of 2.46 against a consensus forecast of 2.43, resulting in a 1.23% positive surprise. While modest, the prior quarters were even more significant. In June 2025, the company delivered a 4.14% surprise, and the March report showed a staggering 7.78% beat over expectations. This consistent ability to outperform analyst models quarter after quarter is a primary driver of the stock's valuation support. It forces analysts to continuously reevaluate their models and often leads to the beat and raise cycle that investors look for. Seeing how J&J maintains this winning streak into the 2026 fiscal year will be a critical signal for the stock's continued momentum and its ability to weather broader market shifts. Looking ahead to the remainder of 2026 and early 2027, the quarterly earnings forecast table outlines the specific targets analysts have established. For the quarter ending March 2026, the consensus EPS forecast stands at 2.09 based on 8 analyst estimates. The range for this period is narrow, with a high estimate of 2.85 and a low of 2.1, reflecting a tight conviction around the company's near-term earnings power. As we move through the year, the consensus rises to 2.04 in June, 3.01 in September, and reaches 2.02 by December. Notably, the revision data shows active sentiment. The March quarter saw one upward revision in the last month. The steady upward climb in projected quarterly EPS through 2026 indicates a fundamental belief among professionals that J&J's growth engine remains strong, providing a high-confidence baseline for the company's near-term performance. The long-term yearly earnings outlook provides a broader perspective on the company's scaling story. For the fiscal year ending December 2026, 11 analysts have converged on a consensus EPS of 11.4. Looking further out, the growth is projected to continue its upward march. 12-point high, 2 for 2027, 13-point low, 7 for 2028, and reaching 14-point ye, 4 by 2029. This represents a steady double-digit compound growth in annual earnings per share over the next 4 fiscal years. Within this outlook, we see one upward revision for 2026, 2027, and 2028 in the last month, signaling that conviction is building among key analysts. The high-end estimate for 2027 of nearly $13 per share underscores the significant upside potential if J&J successfully capitalizes on its pharmaceutical pipeline and medtech innovations. This yearly data is vital for long-term investors, as it highlights Wall Street's expectation for J&J to consistently compound its earnings. The changing consensus chart visually tracks the stability of analyst expectations over the past month. For both the full fiscal year end December 2026 and the upcoming March quarter, the bars remain remarkably flat when comparing current estimates to those from 1 month and 1 week ago. This visual consistency confirms that recent market developments and the latest earnings data have been fully integrated into analyst models without triggering any major shifts in the consensus targets. While there isn't a dramatic surge in positive momentum driving the bars higher at this moment, the absence of any negative momentum pulling them down is equally important. This stability indicates a period of established equilibrium where the market is currently satisfied with J&J's projected trajectory. For investors, this plateau in the consensus suggests that the current stock price is reflecting a well-vetted and stable earnings outlook, providing a solid floor for the company's market valuation. The number of estimates change table confirms this focused and positive sentiment with hard tallies. For the March 2026 quarter, we see 1 upward revision and 0 downward revisions in the last month. This pattern is mirrored for the full 2026 fiscal year, which also shows 1 upward move and 0 downward revisions. While the number of analysts moving their targets is small, the direction is unanimously to the upside. This indicates that the few analysts who have updated their models recently see more potential for growth rather than less. The lack of any downward pressure across both the immediate quarter and the full fiscal year is a bullish indicator of the prevailing market sentiment. This concentration of zeros in the down column serves as a final confirmation of the quiet confidence being taken by Wall Street as they look toward J&J's performance in the 2026 fiscal year. This alignment of professional expectations provides a firm baseline for investors. Finally, the estimate momentum summary provides the precise detail behind these analyst shifts. For the fiscal quarter ending March 2026, the consensus EPS forecast rose from 2.8 to 2.9 over the past month, a 0.7% increase. For the full fiscal year ending December 2026, the consensus has remained steady at 11.4. The summary confirms that while the volume of revisions was low, the net movement for the near term is positive. Estimate momentum is often a leading indicator for stock performance, and the current stable to slightly positive trend suggests that the financial community is maintaining its high expectations for J&J following the recent quarters. These fractional changes in high magnitude EPS numbers represent significant shifts in total expected profitability. This data reinforces the narrative of a company that is managing its margins effectively and remains on a clear path to delivering consistent returns for its shareholders throughout the coming fiscal year. In conclusion, Johnson & Johnson's latest financial profile reveals a company at the top of its game, with a perfect streak of earnings beats in 2025 and a rock-solid multi-year growth outlook. While the consensus sentiment is temporarily stable, the underlying momentum remains positive, with analysts gradually raising their bars for 2026 and beyond. As a market leader with exceptional execution and a strong balance sheet, J&J continues to be a core focus for investors seeking both growth and defensive stability. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on J&J and the broader healthcare markets. We'll see you in the next analysis.